Good morning and welcome to Morning Markets. Today we're going to be focusing on Japan and their latest inflation reports, what this may mean for future interest rates. Yesterday we heard from Jeff, who talked about a number of important data points coming up this week for Japan, most importantly inflation, which was released this morning. For context, Japan has had barely any inflation over the last 30 years, on average around 0%. If you contrast that with the UK's had inflation around 2% or slightly higher. So it's been a challenge for Japan as their households have been a nation of savers rather than spenders, and therefore interest rates are actually negative at minus 0.1%. Now, since COVID, inflation has been creeping back into the economy, and this time last year we had inflation at 4.4% in Japan. But it has been normalising and coming back down as base effects roll through. But the question is whether it's sustainably at the central bank's target of 2% in order to move away from those negative interest rates at last. So if we look at the details this morning, core inflation, which excludes food, that dropped again in January for the third consecutive month, its lowest level in 22 years, coming in at 2%, down from 2.3%. Importantly, this was stronger than expected. Expectations were for 1.8%. One of the key drivers of the higher inflation reading was just strong demand for foreign travel packages. If we look at the Japanese yen today, it's at a record low relative to the US dollar, and it's lowest in 30 years relative to the US dollar, and that's attracting foreign tourists to the country, and that's pushing up prices. So the price of packages actually increased 63% over the year. We're seeing a normalisation in the prices of gas and electricity, so that's dropping through. We've seen a 20% decline, and so the headline figure fell from 2.6% inflation to 1.6% inflation. So with core inflation around 2% now, that's the target. Expectations are that the negative interest rates will actually change and we'll see an increase in the coming months, which is widely expected by the markets. Have to factor in though, the economy is being challenged. If we look at the fourth quarter of GDP, last year it was actually negative, but more leading economic indicators shows a more positive economic environment for the region. How did the markets respond? Well, we saw Japanese government bond yields push slightly higher, and the Japanese yen and the domestic equity market traded broadly flat. That's everything from us today. Thank you for watching, and we'll see you tomorrow.